no better time to bring on our friend Bruce Fraser to hear his take on the overall market environment. Bruce, thanks so much for joining us today.
David, so great to be here on the final bar. Looking forward to it.
A pleasure, my friend. You sent a couple charts, and we are so underweight point and figure charts on the show, and I'm so happy that you sent some. The first one is looking at the Dow. What are you seeing on the first point and figure chart here?
Well, this is a horizontal counting methodology. Point and figure is among the oldest charting methods known, and so this is a very old school approach. But what we're looking at is we're looking at the uptrend of 2019, and this is a bell to bell advance in the market from Christmas Eve 2018, I think, all the way to Christmas Eve 2019. We're just going to have this extension of this great uptrend that has been just a wonderful year. And so this point and figure chart is an attempt to estimate the potential of the advance in the market off of the accumulation structure that was formed in late 2018 and early 2019, literally the first week of 2019. And you can see here, this is a chart I just made for the final bar. You can see here, this is a 60-minute chart, 60-minute data, 3-box reversal method. So 3 boxes like a longer term chart. And it counts 26,100 to 27,000. Well, in fact, we are over 27,000 now, and we are pushing up into the top of this trend channel, which I would expect that we could get to, which puts us around 29,000. So this has been an exceptional move from the count line at around 22,650 up to the levels that we're at right now. I think a couple things are going to come into play as we go into the end of the year. First of all, there's this desire to be able to defer gains into 2020. So I think that that's going to reduce the amount of supply that generally would overhang the market at the end of the year. And so the supply is going to arrive as we get into 2020, into the first quarter. The other thing is you're going to get an attempt to lock in some 2019 performance, which will happen at the end of this year and at the beginning of 2020, especially a lot of hedge funds. I think they'd like to be able to lock in returns. So it wouldn't surprise me if we keep going higher, but the rate of the advance slows somewhat in December. I love this bar on the logo of the final bar because you can see in that bar, you can see that the market opens on the low of the range, and it's a trend bar, and it closes right near the top. I think if you were to look at 2019 in aggregate as one bar in a chart, it would look just like the bar on the final bar logo. So anyway, with this in mind, let's go to the next slide.
Sure.
Because I got a lot of grief when I put this chart up because, well, first of all, people are looking at this chart and going, well, why didn't you show me this chart at the beginning of the year before the move happened? Well, in fact, I did. This was a blog I wrote on January 10th, and the chart, the point and figure chart that I analyzed was created with data on January 9th. And you can see, look here, because we're using finer data, which gives us maybe a little more precision in our counting. But notice we're using 5-minute data. Notice that the same count that I just showed you on the hourly chart counts actually to 28,313, 29,254. It would not surprise me in the least if that is the range that we get into the end of 2019, fulfilling the count that was made at the beginning of the year. So go back to this January 10th, 2019 blog that I wrote to see this chart and others that relate to the environment that we were in at that time. And we made the case that there was a great count ahead, and I actually did get a lot of feedback that about the idea that the market could go from 22 2,300 up to 2,900, 29,000, 23,000 to 29,000. And
Right.
so here it is, these point and figure charts. Hey, I just do the counting. The charts tell us where the market wants to go. So anyway, that is what I think could happen into the end of the year. I do believe that we're starting to accelerate and make a climactic surge here, which could go on for a little longer. But I do believe that that sets us up for a trading range in the first quarter, first 2 quarters of 2020. And if we look at the election year cycles, oftentimes in election years, we have the year of the election, we get a trading range for 1 to 2 quarters. And then in the second half of the election year, you get a really good trend, a really good advance right into the election and beyond. And so I think that 2020 could be very much like that.
So Bruce, we're just out of time. I'd love to know though, with those first 2 charts, I mean, pretty constructive overall leading into year end. What would tell you that that's not playing out? Is there a certain pattern on the point and figure chart, or a certain level, a certain breakdown that might tell you that this isn't playing out as expected? All of a sudden we're starting to see more weakness than maybe anticipated. What would you be
well,
looking
at 28,066 on the Dow, we've effectively fulfilled the count of this accumulation structure. And so we're there. The thing that would tell us that the advance is over, and we're starting to get a little overheated and have been for a few weeks, is that we get what we call in Wyckoff an automatic reaction. And that's a steep, sharp decline that comes suddenly, unexpectedly, and that sets up the outer boundaries of the trading range. Buying climax at the peak, automatic reaction at the lows, that sets up a range-bound condition, and that is what I expect to see in 2020 at the beginning.
That's a fantastic take. Bruce Fraser, thank you so much for joining us on the show. I can't thank you enough. Really appreciate your point and figure approach to the markets here leading to the year end. Thanks so much.
Thanks for having me.